Good morning. It is Thursday, October 12th, 11:30 a.m. Um, some interesting things going on, people. I wanted to talk today about what I see is a very fascinating, interesting dynamic that's playing out, and it's psychology. Psychology. Um, Speculating and investing psychology specifically. I watch YouTube videos. I read comments, and I try to get a handle, the gauge of how people are feeling based on the comments. Some people are in despair, some people are in euphoria, some people are just numb. And betting psychology, sentiment, has an awful lot to do with markets. I don't care what the market is. Now, some people could look at a chart, technical analysis. And some people might use Elliott wave to get these patterns. But at the end of the day, it will always go back to fear and greed. And at the end of the day, the most important thing to remember is value and edge. If you're going to make a bet, if you're going to make an investment, if you're going to speculate, you need value. No value, no bet. No edge, no bet. You say, this doesn't apply to stocks. Oh, yes, it does. You need value and you need edge. I watch other YouTube videos. There are a few people, they recommend books, which is a good thing. But you have to do your own research. You have to be able to do your own homework. You can't be influenced by anyone else, or you're done. You're done. I'm not giving investment advice here. I'm not a financial planner. I'm not qualified to do that. Okay. But for me, you invest in what you know. You invest in what you know. If you don't know something, stay out of it. I have a book here. It's a very old book. Okay. It's called Secrets of Professional Turf Betting. Secrets of Professional Turf Betting. And it's got a publication date here if I could find it. It's by Robert L. Bacon. Copyright 1952. Okay? By Amerpub Company. AMERPUB Company. 1952. Robert L. Bacon, Secrets of Professional Turf Betting. This was my father's book. Okay? This book has influenced my investing career more than any other book. Okay? I don't even know if you can find this book today. I mean, who even knows if this guy is still alive? I mean, he would be probably in his 90s or 100 if he is. I don't know. But, and I'm not even suggesting you go out and try to find this book. Okay? Because this is for specifically for horse handicappers, professional horse handicappers like myself. But in that book, you've heard of Jesse Livermore, right? The famous stock investor, right? Everyone knows Jesse Livermore, okay? And there's a book based on Jesse Livermore's insights, philosophy, experience, right? Well, this book is based on the handicapper's version of Jesse Livermore, Pittsburgh Phil. Pittsburgh Phil extracted more money from horse racing, okay, than I would say Jesse Livermore extracted from stocks, okay? And he lived by basically one creed: value and edge. And I believe Jesse Livermore had that same philosophy. See, if you're going to invest in IBM and it's $132 a share, and it should be $132 a share, you have no value there. If you're going to bet a horse at 5-1, and he should be 5-1, you have no value there. Okay? You need a percentage, okay, discrepancy or inefficiency in your favor. You need to have the percentages working for you. That's why when people go to Atlantic City or Las Vegas, they have no chance. It's mathematically impossible to win in the long run. Okay, in the short run, yeah, anything can happen. But in the long run, the mathematical odds will always favor the house, unless you could figure out a way to put those odds more in your favor, like card counting, okay, for example. Or if you're playing against other people and not fixed odds, okay? So in stocks, in sports betting, in horses, in poker, you're playing against other people. You're playing against the market. And there could be inefficiencies in the market, okay? Value and edge is what I look for, okay? Classic example. Just yesterday, I was driving, I had some errands to run, and I was listening to the radio. I was listening to a sports channel, which I very rarely do. But they were discussing the Cleveland Indians and the New York Yankees. A lot of people were calling up. And he had some quote-unquote experts on as well. And it was so obvious that there was this type of mass delusion when it came to who would win the game. Overwhelmingly, everyone said the Cleveland Indians. They had won 22 straight games during the regular season. They were the best team in baseball. They won over 100 games or 100 games. They had the best pitcher, the Cy Young pitcher, Corey Kluber on the mound, okay? This was the team. They should have won it last year. And to the man, everyone was falling in line. And I'm listening to this, and I'm saying, what am I missing? Is it me? Do they see something I don't see? Because what I see is a team, Cleveland, that's falling apart. They've lost 2 games. Their backs are on the rope. Okay? Their pitcher was knocked out in the second round just 5 days ago. Okay? So he's going in the wrong direction. You got a Yankee team that's young, that's confident, that's playing with confidence, that has the momentum. They've won 2 games easily. They should have won the second game. And I'm like, what are you talking about? And when you looked at the odds, Cleveland was the heavy favorite. This is an example of an inefficient market. So it's all about perspective. The Yankees won the game 5-2. It was a tremendous bet because there was so much value there. And everybody was going in the wrong direction. And they were all brainwashed by these so-called experts. Okay? They can list every single stat, and if we get 4 innings out of CC and he only gives up 2 runs, and Corey Kluber, and it's like they're tripping over themselves to build up this team and this one pitcher. He just got crushed 5 days ago. That 22-game winning streak, that was then. This is now. Don't think about this in terms of stocks. Think about this in terms of gold. Think about this. Broaden your perspective here. There's another book I'd like to show you. I actually had to make a copy of this book. Okay? It's called The Efficiency of Racetrack Betting Markets. It's a very heavy mathematical book. Okay? He talks about the psychology of betting markets. I mean, if you see the math here, okay? If you can see that math, there's derivatives, there's factorials, there's a lot of math, okay, involved. Just take a look at some of that mathematics involved. Okay, it's pretty heavy duty stuff. And I'm a math guy. And I had to get this out of the Library of Congress. It's out of print right now. I had to borrow it from the Library of Congress, and then I had to make a copy of it. Okay? It's a very rare book. But he talks about the efficiency of racetrack betting markets. Okay? The collective wisdom of the market. You could have the most sophisticated handicapper, and he knows everything about every horse and trainer and owner and track and conditions, and he has databases and he has it all plugged in his computer, and he can get every single stat, and he knows intimately, okay, the actual horses on the grounds and who's peaking, who's slumping, right? And then you can get the little old grandmother who decides to go to the racetrack on a Saturday afternoon and she bets the number 5 because she likes the color yellow. Okay? All those people put together, that's the market. All of it lumped together is the market. I'm not going to answer this phone. Yesterday, I picked up the phone. This is too important to answer the phone right now. It's the same thing with stocks. You can know everything there is to know about a company. Apple, Google, Netflix, IBM, Microsoft, okay? Or you could be just a high roller, okay? Somebody taking a shot. All that put together makes up the market, okay? Excuse me, I got a little distracted there. That was my wife calling. So market psychology is very important. Very important. And what I see now is, I see people, when it comes to gold, there's a lot of fear. There's a lot of disappointment. There's a lot of frustration. And then with stocks, I see a lot of cockiness. I see a lot of euphoria. I see a lot of pounding of the chest. Okay? And then there's the other camp. Their finger is on the trigger, right, waiting to sell. Because they just can't believe it could keep going up, keep going up, keep going up. I find this more fascinating than the actual prices right now. And I think it would serve you well to get a handle on this. Markets can be inefficient, okay? And that's where you need to capitalize. That's where you need to look for value and edge. What is the true price of gold? Very hard. It's very hard to determine what the true price of gold is. What do you base it on? Monetary supply? Inflation? What do you base it on? It's not like a company. Okay? So a lot of it is sentiment driven. It's a very emotional asset. Okay? Fear and greed. Many of the people that invested in gold, they didn't understand gold. They got in late. Okay? And I said many years ago, latecomers will not be rewarded in this market. Okay? They didn't understand what they were getting into. They saw it was going up, so they got in. They got in late and they got slaughtered. Okay? Same thing. History repeats itself over and over and over again. Okay? So today, I'm just here to say that, one, I'm only talking to myself, invest in what you know. Two, I got to do my own research. I got to know it myself. Okay? I can't get secondhand news. Okay? All right? Some people, oh, you got to take it all in. No, you got to filter most of it out. Okay? Most of it you just got to filter out. What's the expression? Garbage in, garbage out. Okay? I know this is getting lengthy. There's a couple articles. Actually, I'll save it. One is by Jim Rickards. He's been, talking up gold for how many years now? The 4 major catalysts for gold. All right? If I'm reading it, it's already out there. It's already discounted. It's old news. Okay? So I'm not even going to bother. I'm just saying today, you need to watch more than ever this psychology that's out there. This friction that's playing out right now. I don't care if it's the Cleveland Indians and New York Yankees. I don't care if it's a horse race. I don't care if it's a stock. I don't care what it is. Okay? This is a deep subject, believe me. And I only scratched the surface. But I guess that's it for now. Good hunting. Ciao.